with the shorter risk exposure, I'm still using higher time frame analysis and narrative and all these different confluences to formulate my trade ideas. I'm just in and out a lot quicker than most people. And the reason I do that is, like I said, risk exposure is minimized. So that's what I teach, that's what I advocate, and that's what I do. Sometimes we'll leave runners. On Thursday we had a 40-point runner, but that's never the plan at first. Usually our trades take profit at 10, 15, or 20 points. And if a runner pays, then it pays. But that's the entire perspective. Then as far as strategy goes, it's inversion entries with, higher time frame liquidity sweeps or fair value gap delivery, stuff like that. Well, don't sign up just to copy my trades. That's not the goal. The goal is for you guys to learn my system. Don't sign up for a trial if you just plan to copy trades. I want you to learn the system so you can actually become profitable. Plan for risk management. It depends. How many accounts are you trading? Are you on funded accounts? Are you on evals? What's your experience like? Right. So for me, if I'm trading a 50K, if I have about 2,500 in drawdown, I'll trade one mini usually. My max loss with a 50K on the day is usually about $500, right? So it would take 5 terrible losing days in a row, like max loss days, to blow that account. That's never going to happen if we're sticking to our rules. So that's safe. Occasionally I'll trade 2 minis on a 50K, but that's rare. And then if it's an eval, that's a different story. But you said you're trading funded, so that's what I like. I like 1 mini per about 2,500 in drawdown. 1,500 to 2,500 per mini. If you're still learning the ropes, then drop down to micros. Trade 5, 6 micros, whatever the case may be. Good question. I mean, it's a good way to start, right? Very broad question, but that kind of covers a lot right there. Glad to see a lot of familiar faces in here as well. Joe, what's up, brother? Simon, JIS, good to see you guys. Yeah, quick back test. We'll do that, well, when we're waiting for some questions. We'll pick a random day. I like usually to switch the year, so if we just do like NQH 2024. Backtest of Friday. Let's see. Okay, well, I'll walk you guys through Friday and maybe Thursday as well. So obviously we trade at the open, 8:30 Eastern, 9:30. Excuse me, 8:30 Central, 9:30 Eastern. Right, so Friday was a little interesting. We had these lows taken out right at the open. I think we took some 30-second inversions as our entries, but let's see here. Yeah, Friday we had that sell-off during Asian session all through here. So we had already swept previous day low. We'd come down, right? We had all this trendline liquidity, but none of that got absorbed. It was just straight down basically on Friday. So this is our opening candle. Right here, that's the open, right? You see we swept all of these relative lows at the open, just one unidirectional move straight down, and then rejection of these bearish fair value gaps. So continued to sell off, right? If we jump on a 30-second, let's see what setups we had. How do I identify bias? So I have my higher time frames, right? If you guys look at my screen, you'll see weekly, monthly, daily, and then 12-hour. These are sort of my higher time frame compass, charts, if you will, right? Telling me what's going on in the overall narrative. What I'll look at as well is seasonality. So that's something I'm a big advocate for, is seasonality charts. That really helps with monthly and weekly, and then that fractality can be broken down and applied to even a daily bias as far as how it's going to play out with AMD, right? If you know that, so here, let's see which screen can you guys see. So you're seeing this screen. If you guys type in equityclock.com, I'll put it in the chat. That's a good site, but take a look at that. It'll show you, based on month to month, what NQ is generally going to do. So once I understand the monthly seasonality, I'll jump onto these charts and then look here. So, so far, month of November, naturally our draw on liquidity being that November is seasonally bullish. We've had this uptrend last few months. We have all-time highs here, and that's previous monthly high. That's going to be my draw. Now, we've seen a bit of an exception to that so far this month with price selling off to start the month. And then you see on our weekly chart last week, so much of a sell-off that we actually inversed a bullish weekly gap. So when I'm seeing these technicals, this is going to give me not necessarily a bullish bias, but either bearish or neutral. Huge sell-off last week. Let's see how many points this was. This was over 1,500 points straight down last week. And then this bearish inversion here, if this was a lower time frame, we would be looking at a continuation lower. So I apply those same concepts that I'm using for my entry models as far as bullish inversions, bearish inversions on lower time frames to higher time frames. But now it's a little bit different because we understand that November is a bullish month seasonally. So I would expect, if we don't continue selling off, maybe a little bit of consolidation and then end of the month continue higher based on the fact that November usually closes at its highs. So does December. Price usually rallies going into the end of the year. So only on these higher time frames am I using, external confluences from the charts. But generally, if it's just like a daily bias, I will just look at a daily chart. I'll look at a 12-hour, 4-hour chart. What I immediately see here on the bottom right on this 12-hour is this fair value gap, which we've just poked into on our new week candle here, right? And then we have some relative highs up here. Okay, so relative highs up here, fresh 12-hour gap. This will eventually serve as a draw, and that's visually apparent here on the daily. Same thing, fresh daily fair value gap, right? I'm always looking at where we have fresh fair value gaps, especially when they align with the overall trend or the overall bias. So in this case, anyone can look at this monthly chart and say, okay, the market's bullish, right? Naturally, that's what it's going to do is go up here. Break that down onto the weekly. Now, weekly is, like I said, a little bit of an exception. Now with this close, this was pretty bearish, but you see, even on our last bearish close, price recovered that pretty quickly, and within 2 weeks had made new all-time highs. That's what I would expect here. So going into this new week, I would say we have a fairly neutral bias in the market. I just want to see if price continues this sell-off, and if not, probably consolidate like we did here and then push back up. And when we do begin pushing back up, I'm going to drop down to these time frames like the daily, and I see here, okay, we have a fresh daily fair value gap. This will be a draw on liquidity, right? Even tomorrow, let's say, or in the coming days, we start to ramp up a little bit higher. Okay, then it's very obvious this is our draw. Price wants to rebalance this imbalance, and from there we get a reaction, and then we reestablish that bias. Once our draw on liquidity is hit, that's when we reanalyze. Right, so if we reject this, and let's say we had formed relative lows on the daily, okay, now maybe I'm bearish until those lows. Right, that's kind of a complete overview of what I'm doing. Right, so I'm looking at these higher time frames for trend. I'm looking at fresh fair value gaps. I'm looking at what fair value gaps are holding, and then I'm dropping down to the lower time frames here. Do I only trade NQ or do I also trade ES? I only trade NQ, exclusively NASDAQ. ES doesn't offer any advantage in my view. It is mathematically less profitable to trade ES, only because per point it's more valuable, but it does not move at the same speed that NQ does. So ES, yeah, you're paid $50 per point, but in the same amount of time that NQ moves, let's say 4 or 5 points, ES might only move 1 point. So that $50 per point on ES is good, but in that same amount of time, NQ has fluctuated an equivalent value of $100. Right, so that's why I stick with NQ. It's more volatile, and I did trade ES for a year or two when I was learning futures, but now I exclusively trade NQ. And if you're still learning as well, I would just go to micros. Right, micros move in tandem with NQ minis. You don't have to trade minis off the rip. But on that topic of higher time frame bias, what we'll do right now is formulate next week's bias. So this is something that is included in the full access room, is you get my weekly bias as well. So for you free guys who are in here, you'll, as a thanks for showing up, we'll do that weekly bias now. So here's what we're seeing. This is what I do every single week. I immediately come in and I look at the monthly. Okay, it's bullish. Right now we're kind of just consolidating. We haven't broke October's low or high. Mark that out in white. Right, so we're still within October's range. We're not directional yet. This month hasn't done anything new, in other words, right? And then we look at our next time frame, which is the weekly in this case. So you see here, we did close below this bullish gap on the weekly chart. This was a fresh bullish weekly fair value gap. We've closed below that in just 1 week. So this has been eradicated. It's no longer a supporting bullish PD array for me. You can, take it off if you want to. But what we did tap, right, is a weekly volume imbalance here. We rebalance that fully. Then we also tap this weekly order block. So reason for price to bounce here, this is a clear order block on the weekly chart. We displaced well above it. We literally created a fair value gap above this weekly order block, and we've tapped that and reacted. So very neutral going into next week as far as technicals go. And I'd be curious to know if we actually tapped the mean threshold of this. Okay, so this is another confluence. If we attach a fib from the open to the low of this weekly order block, you'll see we did not break its mean threshold, its halfway point. That is a bullish technical there. So that should play out with a little bit of a bounce. So this week, I'm fairly neutral as far as the weekly chart goes. Right, if we jump onto the daily, we do have that fresh fair value gap. So once we start closing bullish on the daily, that is my draw. Had we not already had our new week open, I would say Friday was our draw for today. And that's obviously been hit. Right, this was Friday's close. This was the high of Friday. We're now above that. And we're in this fresh 12-hour bearish gap. So now I'm really neutral. Now this is when our overnight action becomes our next method of analysis, right? What did Asia do? What did London do? Obviously, we see here that Asia has broken Friday's high, and it's formed a new week gap. It's tapped into this fresh 12-hour gap. So now I would be thinking, okay, if this was just before the open in New York, I might want to see a bearish reaction and see price fill this new week gap. But we'll see overnight. Obviously, we still have 13 hours until the New York open. So we'll see what comes up there. But, daily draw, in my view, has been hit. We've broken Friday's high. For this week, we'll just see how far up this candle we retrace. I don't think we make new all-time highs this week. That's beyond our weekly ATR, right? How much does price move usually in a week? This is well above that. And I don't think we have... CPI is supposed to be this week, but I think it'll be rescheduled. It's tentatively scheduled at the moment. If you guys go to forexfactory.com, you'll see there's no set time. So not much news this week either. So it should be a fairly calm week in the market. I don't think we do anything crazy. It could be an inside week like we saw here on this weekly candle, which might lead to a bit more chop. All right. What I do want to look at is Thursday's setups for you guys on stream. We'll just take a quick minute to review that. So we had a couple of shorts on Thursday, which were aligned with our bias. KOT, is he still here? He's not. I need to give him a roll. But, Thursday, this was our action overnight. We were in a significant premium of our range. We had these relative lows formed overnight in the market. Right, you see that here. And then we had our daily low of day back here. This was taken out pretty quickly at the open. We did not get a short here, straight down, but we did get a short in this move right here. So in this retracement up, price rejected this bearish 1 minute fair value gap, didn't sweep this high, right? And then we had a a bullish 30-second gap here that was inversed, and that was our short, right? So if you guys don't know, I'm always looking for 3 factors in a setup. What's the draw? What's the delivery array? And then what is the entry model? So draw, delivery, and entry, right? Number 1, draw here was low of day. Very obvious, very clear. Price was showing a willingness to draw down toward it. So that's number 1. Delivery here was this bearish 1 minute fair value gap. That's number 2, right? Rejected that. And then number 3 was that 30-second inversion. So the trade was something like this. We were in here, took profit down here, right? Really great trade. You know, we 1.22 risk reward is great for the strategy. Sometimes we'll take trades that are 0.8, but with that really high win rate, the math works out great. After that, we had our long to these relative highs, right? We saw a V-shaped recovery down here. Price swept low of day, inverse this bullish, this bearish 1 minute gap, got that close, got along to these relative highs, right? Which we swept just before coming back down. Very clean day on Thursday. You know, it's rare that analysis and execution line up, and when they do, it's beautiful. So you guys see here, this is our new week open. We have that very obvious gap in the market. We've come down and filled a little bit of it, tapped halfway. I think, you know, overnight we'll probably come back down. And if not, this could be a draw for tomorrow for AM session, right? If we sweep, if we reject this 12-hour gap, right? On the daily, we could see a reaction to this order block as well. Curious to know though what questions you guys have for me. You know, we have our back testing sessions and whatnot on YouTube, but psychologically, if you have questions, if there's something that, you know, you just keep running into, revenge trading, not sticking to a daily loss limit. If you guys have any questions about that stuff, let me know. What I'll do right now is pull up a NQ contract and we'll just analyze some setups in real time. So if we just go to a random day, this is March of 2024. We'll go to, yeah, this Monday is fine. So I'll walk you guys through my morning analysis as well. All right, so this is a random day in March of 2024. This is what I would be looking at. This is 1 minute before the open, how I would be analyzing the market. And then we'll do this real quick, and then we'll look at some setups that we took last week and walk you guys through those. But you know, if I'm coming in here, the first thing I'm seeing, right, is always liquidity. Where are swing highs? Where are our swing lows? And you know, what drawn liquidity would we be seeing? So immediately my eyes are drawn down here. It looks like we did sweep this prior low, but very shallowly. So I'd be curious to see if price comes back down to these relative lows, right? But we have some highs up here, so that's something else my eyes would be drawn to. And then if we just do a fib from our high of day to low of day, we're probably around equilibrium. Let's see. High of day up here, low of day down here. Yeah, just tapped into a premium and rejecting it so far. So, you know, at the open, I would be leaning a little bit bearish here. We do have a fresh 1 minute gap there. I don't know if TradingView will let me. Okay, well, we also have our fresh bearish 15 minute here and a small bullish one down here as well. So I'd be looking for a reaction to this bearish 15 minute and our daily premium at the open for a continuation lower. But let's see what we get, and let's just see how it plays out. All right, so we tapped that fresh 15 minute bullish, probably sweep this swing high next. No entry there. Okay, down in this fresh 1 minute. Okay, and there's those lows, right? So that's a reaction to that fresh 15 minute we just looked at, that bearish gap and our daily premium. And now we're seeing price sweeping these lows. JIS asks, do you get a lot of setups on, I'm not sure what that word is, like possibly this one, I use almost at all times. Not sure I understand your question. Get a lot of setups on a week like this one. Oh, are there a lot of setups on like a no news week? Yeah, that's a great question. There are. The beauty of scalping the 30-second and the 1 minute is that every single day there's multiple setups, right? And even just in the 1 or maximum 2 hour window we trade, there's always setups. It's very rare that we have to wait more than 30 minutes for a setup to come up. Now, and if we're waiting 20, 30 minutes, it's usually because whatever inversion did present itself wasn't worth taking, but there's always setups to take. The risk here is not, oh, is there a lack of setups with APJ strategy? It's more so, how do I develop the discretion, right, to know which setups not to take? I teach you guys the entry model, and that can be learned very quick. You can learn my entry model in a day. The time is spent developing that discretion, and my entire goal with the live room, with Q&As like this, is to provide insight into how to develop that, right? How do you know which setups to take and not to take? And like I said, it's those different factors like draw, delivery, and entry. It's that higher time frame narrative, that bias that we looked at. All of those factors play into, can you make it profitable or not? Harold, how much does it cost to be a part of the community? Well, we have our 7-day free trial. After that, it is $97 a month. Chewy asks, would I have taken that trade just now after this big bearish candle? No, I would not have. And here's why. That's a good question. We were in this open 1 minute fair value gap. Anytime we're in a conflicting FVG like this one here, that's almost always a no trade close, right? When we don't close above or below and just close within it like we did right here, I'm not taking this trade. This is a reason, this bullish 1 minute fair value gap is a reason for price to bounce, and that is a potential reason for us to be stopped out. So I'm certainly not going to take a trade down here. The only way I would have been a close like, so we have a fair value gap here. If we had closed just below this fair value gap, right, I'll mark this out. If we got to close here, that would be a good short. We're coming off of our daily premium and 15-minute fair value gap reaction. So a trade like this, change these colors to make it a bit easier. Orange is profit, blue is drawdown. I would be targeting these relative lows here in this fresh fair value gap. So this is my target. My entry would be something like this. And then I would put a stop within these order blocks, probably something like that. Let price tap this order block and this one for about 1-to-1 risk to reward. And that's a great setup for us. We have our low of day drawdown here. We have our premium rejection up here and then a clean entry. Obviously that didn't happen, but this is how I would have liked to see a trade play out. Yeah, I'm glad, man. That's the goal, right? All of my short form content is, 2 or 3 minutes of jam-packed information. And, if it resonates with you, we have more free resources to elaborate on all that. Hope to see you in the trial room for sure. So let's continue going through this day. Let's see what other setups materialize. So far, no trades. This is not an entry. Obviously, we're making a new low of day every time we break down here. All right, so we're rejecting, forming some huge upper wicks. Now, my draw here. So keep in mind, I do take entries on the 30-second as well. This is just a 1 minute chart. I can't backtest on the 30-second. But if there were to be a bearish fair value gap right here, so if you guys look closely, if there was a bearish FVG on the 30-second in this area, right, where there's not one on the 1 minute, I would take this as a long. Here's why. We're coming off of a low of day sweep. That's a major liquidity sweep. And we have a fresh bearish 1 minute fair value gap up here. So price wants to draw up into this to either continue lower or to completely reverse. But either way, it wants to come back up into this fresh 1 minute gap. So this is a great reversal trade. And I bet on the next candle, we actually tap into this 1 minute. Yeah, boom, exactly. Now you see here on the 1 minute, we did close above. So this is another trade we need to analyze and see if it's worth taking. A setup like this, the only drawback I have, without seeing a 30-second chart, so this is, it's kind of not a full view. I don't have the 30-second. There could be a bearish 30-second here that I'm not seeing. But a setup like this, we have relative highs right here in the market. Okay, we have our 930 high as well. We're coming off of a low of day sweep right here. Right, these relative lows have been swept in the market, and we have a 1 minute inversion. So just from what I'm seeing on the 1 minute, it's a clean trade. It would look something like this for me as far as risk reward goes. I would enter on a slight retracement, just being that we're in a premium of this range. I'd want to see it come back to the inversion edge, and I would put a stop. On this trade, a stop is reasonable about here. My logic behind a stop placement like this is very obvious 1 minute order blocks down here. Right, these candles here have been created into an order block in a volume imbalance here. But beyond that, if price continues any lower, it's probably going to make a new low of day. So I'm not willing to do something like this. This is just preposterous for me. So stop like this. Let's say we bought that close. I can't do retracement entries here on TradingView backtesting, but let's say we were long. Right, we want to exit at these highs and stop down here. I'm not sure why this is giving me an exclamation mark, but let's just see how this trade plays out. I would put my stop break even now that we've tapped these wicks. As you can see, drawing up, and beautiful. Took profit. I don't know what's going on, why TradingView is not letting me get out, but you guys see this. Bought this 1 minute close. We got our retracement entry to this fair value gap edge, right? Reason being, remember, draw delivery entry. Draw here are these relative highs, as well as our New York high there. Delivery, low of day sweep. Okay, so risk reward as far as longs and shorts goes, we're in a discount, so low of day has just been swept. Longs are, potentially profitable if price reverses, which we get that confirmation on this close. We get a retracement entry. We put our stop just below this 1 minute displacement candle, allowing price to tap this 1 minute order block and this volume imbalance there, very small. And then we take profit at our relative highs. Beautiful setup there. You see this paid 33 points. That's huge. Right, from entry to exit, and absolutely almost no drawdown. Okay, this is 3 points of drawdown and 30 points of reward. That is an A+ setup. When you have those different confluences and factors, that's beautiful. So that's a live example of a trade I would take, and how I would go about managing the position when it comes to entries, exits, and when I go break even. So if you guys want to screenshot this, do whatever you need to do. This is a great example. You see, I just came to a random day in March of 2024. We let it play out. We did a live analysis, and we executed in quote unquote real time. Obviously, it's backtesting, but I've never backtested this day or anything like that. I'll send this screenshot into the chat so you guys can study it. And this will be a recorded Q&A session, so if you want to come back and watch it, you can. All right, so that's some backtesting there. Let's look at our setups from last week. If you guys have questions, let me know. We're about 30 minutes in now. We'll review last week's trades, and if no one has questions, we'll call it there. I know you guys have lives outside of trading, and it's Sunday night, so hopefully spending some time with family, stuff like that. But let's look real quick at our trades last week. What I'm going to do instead of switching my screen share is just copy and paste the trades onto this TradingView window. Get out of backtesting right now. Go back to NQ. All right, so we're just going to copy and paste the setups. So for those of you not in the live room, these are the 12 trades we took last week. We had 10 winners, 2 losers, so 100 divided by 12 times 10. Not bad. We had an 83.33% win rate last week, which is super solid. It's sustainable. Our exceptional weeks are those 85, 88, 90% win rate weeks. But obviously every week is not like that. But all right, so let's look at last Monday was November 3rd. I believe we had 3 or 4 trades that day. Okay, so we actually started Monday with a loss last week. This was one of our 2 losses of the week. I don't have a picture of that one, but we do have this winning long here. So another good example of a long. So you see this setup here. This is my 30-second chart. What do we have? All right, we have a clear uptrend established in the market. We have price coming down. For a while, we were respecting this bullish 30-second gap, and then we dropped lower and we tapped this fresh 30-second here, and that's where we got this bullish reaction, complete V-shaped recovery. If you guys have heard my videos, I love V-shapes, especially when it's back in trend like this. We get that 30-second inversion here. That is our trigger to go long. I got it a bit late. I'm not sure why, but you buy this close, you target our recent high in the market, and a stop in this case would have been, either this displacement candle low, if you want to let it breathe, or, just let it tap this order block and put your stop there. Really good risk reward. Got about 22, 23 points on that setup. That was Monday. One of the trades on Monday. Let's see. Next setup. This was great. This is a perfect example of proper stop placement and how it can make or break a trade. I had seen some people who were not, not taking this trade on stream with me, but let's say they trade 1-minute inversions or 30-second inversions. They took this trade and got stopped. Stop placement is half the math there. If you don't know where to put your stop, you might be getting stopped out unnecessarily and turning what should have been a winner into a loser. All right. So anyway, here we had another bullish trend in the market. Price retraced. We tapped this fresh 1-minute fair value gap. That is our delivery array in this, and I believe there's also a fresh 5-minute that price tapped. We got a 30-second inversion here. Right, there was a bearish 30-second gap here that got closed above. Got an entry. I honestly didn't even have a great entry, as you can see. You could have got a much better entry than me. But what I did do right was stop placement. This is something most people don't talk about, and they kind of just say, oh, do a fixed 1-to-1 risk reward, blah, blah, blah. That has never made sense to me. And the way I make money is with chart-based stop losses, right? Every setup is unique. So why would I be going in with a static stop placement strategy? My stop here, you see we have a 1-minute order block right here. This is our last bearish candle, before price bounced up. So this is an order block. We displaced above it. My stop was just mean threshold of it, as you can see right here. Price consolidated for a while. It did dip into this order block body, and then it shot up. That is exactly what I was expecting, and fortunately, it did happen to play out. We also were respecting this bullish 1-minute gap there. So another example of a long. This was all on Monday. Let's see if we go to Tuesday. We had a short. Ooh, this was a good short. This was on Tuesday. Great short here. If you guys look, we tapped some. This is a 30-second chart again. Tapped a couple of fresh bearish gaps on the 30, right? Rejected them, right? These wicks just stabbed into them, rebalanced them, did what they need to do, and completely reversed back down. We inversed this bullish gap here, right? All this here, that's been inversed. Got our 30-second close here, and we had relative lows, right? One swing low, price comes all the way back down, doesn't sweep it, forms another swing low, shoots up, rejects these bearish 30-second gaps, comes down, gives us that short entry, and this was all profit, right? There was no drawdown yet again on this trade. So we entered at about, let's see here, 4-3 entry and an exit at about 3-1. So 12, 13 points, good short there. I'm always exiting at major liquidity. I'm not trying to hold very far beyond that because price has a reason to reverse. Anytime there's a reason to reverse, I want to be risk off. That's either break even or taking profit. If you're trading 2 or more minis, you can afford to scale out 1 or 2 contracts and then leave runners. If our bias is aligned with the trade, if we were bearish and we had, let's say, previous day low down here, okay, then leave a runner. But you at least need to take off some of your position at internal liquidity. All right, so that was on Tuesday. That was our first trade. And then we had a reversal actually just after this. So you look at this chart, you see we're forming some bearish gaps. Now let's jump onto a 1-minute. Again, this is still Tuesday. This is right after that short. This was our next trade. So boom, we have relative lows swept here in the market. Price moves up and then right back down. So early longs got stopped. Anyone who chased this move thinking, oh, that's a reversal, they have just been stopped. We get that 1 minute inversion here. So we're buying this close. My stop on this was just the wick of this order block. Very good risk reward, 1.14. My thinking behind this is, okay, price has already come down once. It really shouldn't come back down again. So that is why I had a tighter stop. And then we're exiting at that internal liquidity here. Again, I could have held till these highs, but that's not my strategy. I'm not going for the most amount of points. I'm going for consistency. I want to get in, get out where I know I should, rather than, trying to hold for the biggest move. So 16 points right there. And then this was our last, was this Thursday? Was this? Let's see here. This was Wednesday. So then one more trade on Wednesday. Oh, same trade, excuse me, same trade, but just a breakdown if we look at some higher time frames. This is what we had going on the 15 and the 5. Very important. 5 minute had just swept relative lows here, bottom left of my screen, and reacted bullishly to this 5 minute fair value gap. 15 minute had tapped a discount of our daily range. Okay, so from high of day, low of day, you can't see it in this picture, but this red line is equilibrium. We had tapped a discount of our daily range, and we were reacting to this bullish 15 minute as well. So a couple more bullish confluences as far as our delivery arrays, right? By delivery, I mean what is price reacting to that aligns with this trade thesis. So what bullish reactions are we seeing in the market, and why are we seeing them? To help our longs. Those are the two bullish arrays there. So that's Wednesday. Let's look at Thursday real quick. If you guys have any questions, again, just shoot them in. Once we're done with this, we'll probably call it. Okay, so first trade on Thursday was a short, and we just covered Thursday a little bit, but we'll look at this first short. What it looked like. So it was a 30-second inversion, like I said. Price had sold off. So if you guys remember 5-10 minutes ago, we just covered this, but rejected this 1 minute bearish fair value gap. That's our delivery array. We had a 30-second FVG, which was inversed. This is a 1 minute chart, so you can't see that 30-second gap. But sold short there, stop at the displacement candle here on the 1, and take profit at this low. A great trade here, 23 points, phenomenal. And then our second trade was just after that. We had come back up. So our first trade was in this leg here. Second trade, we come back up. We leave all of this trendline liquidity, right? So lows higher than the last. People are putting their sell stops in the market there, and smart money knows that. We sweep these relative highs. We reject that same 1 minute bearish gap. And then here is our 30-second close below this bullish gap. My first entry was not so good, so I added just, because price did give that retracement I would have wanted. And then took off a contract here, and then scaled out a little bit before these relative lows and this trendline liquidity was swept. This is a phenomenal trade. Bearish trend in the market. We get a quick reversal, sweep relative highs, instant reaction. Price shows a willingness to come right back down, and then we have downside targets down here. All of these lows here, they're not sweeping the prior low. So that in my mind, I instantly see that, and I recognize a ton of liquidity that smart money wants to come down and get. So that was Thursday. Phenomenal trade there. This is the setup that made me like 1,500 per account because it was like a 40-point runner trade. Friday. Was Friday a one and done day? I believe it was. Let's see. Yeah, Friday we just took one trade, and this was it. It was we can just go to it right here. It was a long after we had sold off at the open right here. So you can't see much here on the 1 minute, but we had a 30-second bearish gap, something like this. We had closed above it here on this 1 minute, bought on a retracement, exited again at a fresh 1 minute bearish gap. I love targeting fresh fair value gaps because price wants to rebalance these, right? FVGs are just imbalances in the market, and an imbalance always wants to be rebalanced. So we targeted that, and we called it a week there. Let's see. What's the most trades I take in a day? Here, Jack, I don't know if you know, but your mic is unmuted. I'm going to mute you. Just text if there's any questions. So Chewy asks, what's the most trades I've taken a day with a max? Um, if it really depends. On average, it's 2 or 3, right? But the most I would take, that boils down to how many groups am I trading. If I'm trading 2 groups, as in, I have accounts pooled into one group and other accounts in another group, I don't necessarily have a trade restriction as far as quantity goes. I more so stick to my P&L goals. So, let's say I need to make $500 per account. That might take 2 trades. I might get 250 off one trade and 250 on another. That's where I'll stop. But I also have a max loss. So if I take a few trades and I'm red, I'm going to stop there. Um, Generally, I don't want to be over trading because there are so many signals, right? There's 120 30-second candles in an hour. There's bound to be lots of inversions not worth taking. So I would say, if you're taking more than 5 trades per account in a day using this strategy, you're over trading, right? You're not being selective and you're probably getting chopped up, right? That's when you need to zoom out and, okay, jump off of the 1 minute, jump off of the 30 for a while. Let's see what fresh fair value gaps form on the 5. Let's see if we tap into a premium on the 15, stuff like that. And then you drop down and you zoom in for those sniper entries. Good question. Okay, Joe asks, when I knew that I could repeatedly make these trades and be profitable, was it something I knew early on? Like when I made my first $5,000, or I didn't realize after the profits started coming in? Honestly, I think when I got my first payout in early 2024, about 2 years ago, I always knew the strategy worked, right? So I spent 2 years on nonsense and then 1 year in ICT and kind of coming up to this strategy, and ZK and I refined this and figured out this is what we need to be doing. And once I got that first payout, that's when it's like, okay, it works, right? Like, not only does the strategy work, but I have the emotional and psychological control to complement that strategy, right? Any strategy works. I mean, people trade different strategies and can be profitable. It's just about what strategy produces a conducive mental environment for you, right? If you're someone who does better with knowing, okay, every day I can take a trade, which this strategy offers, it's just up to me to be disciplined, then that's good, right? Some people might do better saying, I don't know if I'm going to be able to trade today. If the market doesn't give me these million factors on my checklist, I'm not going to have a trade. I don't like that because I like to come into the market knowing that, if I'm disciplined, I can make money today. So I always knew the strategy worked. It was just about developing that mindset to allow it to work out to its full potential. You definitely feel better when you start making 5, 10 grand plus a month. But it's less about does the strategy work? It's more about, okay, do you have the mindset to be a consistently profitable trader? And you'll have your ups and downs. Every day you need to be on your A game. It doesn't just suddenly, you get your first payout or you get your first $5,000, $10,000 a month and everything is easy. Every day you have the threat of blowing up, of tilt, of a lack of discipline. So it really just becomes psychology, you know, being aware of that threat and managing risk, avoiding triggers that lead to revenge trading and tilt. If of course we're humans, we like tangible results. So when we see that first payout, then you feel great. And from there, I would focus on just repeating that same process that got you the first payout and scaling it, right? So let's say you got a payout on 1 or 2 accounts. Okay, now let's go for 3 or 4 or 5. And through that growth, you will have new challenges that arise because you're going to be seeing bigger P&L fluctuations. You're going to be dealing with amplified emotions. Now, instead of $1,000 or $2,000 payout on the line, it might be a $10,000 payout, right? Oh, if I just get these 10 trading days, I can really withdraw 10 grand. So you'll get to know yourself more too as you continue to scale. But if you've done it once, if you've gotten a payout once, that is the proof in the pudding. That should be everyone's first goal and milestone, is achieving that first payout. Because if you get a payout on one account, even if it's only $500, there's plenty of prop firms out there now, and even just with Apex, you can trade 20 accounts. So that much easier said than done. But that $500 payout on one account, you multiply that by 20, that's 10 grand if you were trading 20 accounts. So that the outcome can change very quickly as far as how much are you making. It's just about sticking to that process that got you the first payout, and being able to replicate it at scale. But through back testing, through forward testing, you'll know if a strategy is worth it or not. Hopefully that answered. I know I went on a bit of a tangent there, but let me know if that answered your question, Joe. Cool. Glad to hear it, man. Yeah, I know, based on where you are, I would just be focused on scaling now. Trade some more TPT accounts. Once you max out there, look at some other firms, maybe look at Apex, and just keep scaling, copy trading, break them up into groups. It really, you learn the strategy, and then you learn how your mind deals with the strategy, right? How do you deal with euphoria? How do you deal with FOMO? How do you deal with taking a loss? How do you deal with revenge trading? All those things. That's where the time is spent, in my opinion. Do I only use Apex? I primarily use Apex, and that's where my payouts are from. But TPT is also really good. I'm actually gonna grab a bunch of accounts tonight at TPT and start those. Apex, we published a prop firm guide on WAP. So if you guys log into your WAP dashboard, just look at free guides. We have a prop firm guide breaking down the big three right now. So Apex, Top Step, and TPT, the advantages and disadvantages to each one. Apex, biggest advantage there is 20 accounts, but it does take a while to get the first payout over at Apex. TPT, biggest advantage, daily payouts. Top Step is kind of out of the game, in my opinion. They don't have any unique edge besides end of day drawdown compared to trailing, but with scalping, that doesn't really do much. Do I think Alpha is good? I think you're talking about Alpha Futures. I've never tried them. I would look at, how much have they paid out, and are they US based? I wouldn't trade with any firm that's not a US based firm. But if they don't have some unique edge, like if there's no particular reason to trade that specific firm, I would just switch to one of the bigger ones where there's not going to be payout issues or anything like that. It's pretty nice though. I've been trading prop firms for 3 years now, and the growth in the industry, the competition has increased immensely. Back when I started, the biggest one was Elite Trader Funding, and now they're pretty much obsolete. Most of you guys probably don't even know who they are. Apex came around, they crushed it. Top Step crushed it, and now this year I've really seen a growth curve in other firms like TPT. That's interesting about Alpha. What do you mean it doesn't affect your drawdown though when you withdraw? I need to look into them. I really haven't done my research on Alpha. No need for a buffer. Oh, I see what you mean. Yeah, that's good. I think it's the same with TPT. You don't really need a buffer, unlike Apex where you need to make whatever 2,600 before you request your first 500 on a 50K, which is, again, that's probably the one drawback with Apex right now. Will you learn about funded accounts? Yeah, absolutely. You'll learn about funded accounts, and I don't know if you join through WAP or through a direct Discord link, but if you join through WAP, we have a prop firm guide. So it's breaking down the big three, like I said. You can read all about prop firms there. I believe I have some videos on my YouTube or my TikTok about the prop firms as well. TPT is the same, but dynamic drawdown doesn't matter with the strategy. Yeah, the trailing drawdown, if you're sticking to A plus setups, you'll always have full drawdown trading our strategy. So, if someone was going for bigger moves and they're holding trades for 30 minutes, an hour, then yeah, top step is good. Or, whatever firm has an end of day drawdown rule. Harold, if you have any other questions about prop firms, while I'm on, let me know. It is definitely the most optimal way to trade, in my opinion. You're not risking any of your own capital, and you have a great ROI. So if you look at it from a business perspective, you invest $200 into an account. Even if you only withdraw $2,000 for the life of that account, you blow it after $2,000 is pulled out. That's still a 10x, just on a numbers ROI. And then like from like TPT or Funded Next, where you can withdraw daily, that's basically like a cash account. If you make $500 today, you can withdraw today. Do it again tomorrow, right? So on and so forth. There's no need to trade cash accounts like your own personal cash when it comes to futures. Anyone looking to day trade for income, right, to make a living from day trading, this is by far the best opportunity route there is. Futures, prop firms, and obviously I'm biased, but our strategy, I think this is the proven method when it comes to day trading, right? You're the least risk exposed. Uh, you have a solid edge. You can come into the market knowing that there's going to be setups every day, and you're not risking your own cash. We'll give it about 5 more minutes, guys. Go for an hour here. If you guys have any more questions, let me know. Seeing some decent movement right now in Asian session. If you guys, have studied ICT enough, you'll see this AMD right now. Accumulation here. Right. Manipulation here with this swing low, sweeping this low, and then getting all that distribution. Notice that this accumulation was also right at equilibrium of this range. You just put a fib up. Chewy, I see you typing. Let me know what question you have. Yeah, I'm glad you found it helpful, Chewy. Anytime, man. Even if you guys just want to shoot me a message or ask us questions in the chat, feel free. Don't feel like just because you're free, you don't deserve some help as well. I mean, the goal is really to give you guys whatever tools you need. Which prop firm do I recommend starting with? Do they have a yes? They're every prop firm puts you through an evaluation stage. Not even before getting a live account. Most people will never see a live account. You see funded accounts though, so that's what I think you're referring to. Yeah, every prop firm puts you through an eval stage first, and then once you pass that eval, you get graduated to your funded account, in which you can actually withdraw cash. Who do I recommend starting with? I mean, I love Apex. I really do love Apex, because once you build that first buffer, you can withdraw a whole lot. But they're the biggest firm, like $600 million paid out in 2 years, 3 years. But look at Apex and look at TPT. Those are the two I would recommend to you. So apextraderfunding.com and takeprofittrader.com. Apex, we have an in-house discount code. I think right now it's like 71% off. Just APJ is the code. TPT, we currently do not have a discount code for, but you can use their code, which is just no fee 40 for 40% off. Both really solid. All right, let me know any more questions, guys. If not, we will call it here. Cool. Sounds good, Harold. Guys, I appreciate you tuning in. Chewy, Harold, JS, Joe, Ming. I appreciate all of you guys. Let me know any questions you guys have throughout the week. We're always available and happy to help. And look at WAP. Look at your free WAP dashboard. There's like half a dozen guides in there, absolutely free for everyone. And if you guys are on there, feel free to leave a review as well for us, please, on WAP. It really helps. This is how we'll grow and implement more resources, tools, and discount codes. Yeah, absolutely. I'm glad you guys tuned in and you guys are investing the time as well. Regardless of what stage you're at in your trading, if you're profitable, if you're still learning, if you're willing to put in the time to learn, I am more than willing to supply you guys with the resources and my time to help you. So I appreciate you guys. Message me any questions. Other than that, have a great weekend. Excuse me, have a great rest of your weekend, I guess. Have a great evening, and looking forward to crushing it with you all this week. All right, have a good day. Bye-bye.